QuickBooks Pro Desktop 2021. Forward contract for speculation that foreign currency will weaken initial transaction within QuickBooks. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our problem 3 multiple currencies practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In a prior presentation, we entered the initial transaction in Excel. Let's take a look at that now. We'll go back and then enter it in QuickBooks. So the initial transaction is that we got our forward exchange contract. So we're going to put the receivable and the payable on the books at this point in time, both receivable and payable being paid then or will be paid within 180 days. We put the receivable on the books in the current dollar equivalent of the money that we'll pay in the future, which will be 5,000 pesos, using the current, not the spot rate, but the forward rate. So the 5,000 pesos times the 0.74. And then we have the payable on the books, which we're actually going to be paying in the foreign currencies within the pesos. So we need to enter this now into the QuickBooks system, which is a little bit more difficult because we're not simply going to enter the journal entry. We want to make sure that we have the foreign currency set up so that the calculations of the foreign currency can be done as easily as possible within the system. So if we go back on over to QuickBooks, then within our flowchart here, we have basically up top the vendor section. We have the payable section. Now the payable is the item that's going to be in the foreign currency. So we'd like to set it up in the system so that we can have the bill that will be entered, increase in the payable, then we'll pay the bill, and then that will help us to record the adjustment for the change in the currency as well. On the receivable side, we would like to enter the invoice, which would basically make the receivable, and then we can record the payment, this one not in foreign currency, so it should be a little bit easier for us to process, easier for us then to do. We obviously set up the foreign currencies first by going to the lists drop down. We went to the currency lists, and then we set up our Mexican pesos that we're going to be dealing with here. And we did that by including all the items. We right-clicked on the one we wanted, and we made that an active item. And then I'm going to make this so we don't see all the inactive ones. And then there's going to be the peso we're going to use. Now, if we were doing this as of today, we could see the spot rates today, which means I can go to the activities drop-down and say, let me give the rise up, and we want to see download the latest rates. That'll give us the latest rates here, but this is going to be the spot rate, the current exchange rate. What we want is the forward rate, so we're going to have to manually input the rate here or manually input it when we enter the transaction. I'll go ahead and input the rate here that we want to use. So I'm going to go into here. We're going to say this happened as of 10/1/21, let's say. So I'm going to say 10/01/21. We're working basically in the future at this point. The rate that we're going to be using then will be the 0.74. So we're going to say this is going to be 0.74, which is, I know, substantially different than the current exchange rate, but so practice problem here. These don't represent the actual, exchange rates at this time. So 0.74. So we're going to say, okay, we'll set that up. And then we're going to go into our lists drop down. Let's take a look at the chart of accounts, and we want to set up the receivable and the payable. And I'd like to set up another one specific to this transaction. In other words, we could use the normal accounts receivable and payable, but when I see the chart of accounts or balance sheet, I'd like to see it broken out for the special kind of forward contract, so I can see it broken out in a separate line item. So I want to set up another account for them. I cannot set them up as an other current liability and an other current asset account, because then those don't have the functionality to track the foreign currencies, but rather I have to set them up as another accounts receivable account and accounts payable account, or at least accounts, the one I'm going to use foreign currency, which would be the payable account. So I'm then going to go back on over. Let's set that up, and let's set up these two accounts by going to the account drop down or rise up. And we're going to say we want a new one. And I'm going to say that this is going to be drop down. We're going to say, let's set up the receivable first. And I'm just going to call it a receivable from exchange broker. Receivable from the exchange broker. I'll correct the spelling on it. And then I'm going to say this is the one that's going to be in US dollars. So this one's in US dollars. So that's it. And I'm going to say save and close. So there we have it set up. Then I want to set up the payable, which is going to be in the foreign currency. So I'm going to say account drop down rise up. And then I'm going to say new item here. and this is going to be a payable account. So this is going to be a payable type of account. So payable, continue, and then I'm going to call this then a payable, and we'll say this is going to be from the exchange broker as well. This one then we need to have in the Mexican peso. So we're going to put this in the currency of the Mexican peso here. Notice that if I set this up as, say, an other current liability account, I would not have the option here to set it up as a foreign currency account. So that's why one reason why it needs to be a payable type of account. Save and close. So now we have the two accounts set up that we can enter the transactions within. I'm going to set up then the vendor. I need a vendor which will also be for the foreign currency. So I'm going to go to the vendors drop down and then vendor center to do this. You could set up the vendor as you go, as you enter the transaction, but I like to do it here just to emphasize the fact that we need the vendor lining up with the currency we will be using. So I'm going to call this the exchange broker, and then the currency for the vendor is going to be the foreign currency, in our case the peso. So we're going to pick up the peso there, and I'm going to label this in the name that I want it to be the peso, which is abbreviated as MXN. So MXN for the peso. So I'm going to say okay. That's set up. Then we want to go to the customer drop down. I'm going to set up a new customer as well. So I'm going to add a new customer. This one will be fairly straightforward because it will not have a foreign currency. So I'm going to say new customer. And I'm going to say that this is going to be for the exchange broker again. And I'm going to call this USD for US dollar. And we're just going to have the US dollar as the currency there. So I'm going to say okay. We're going to say okay on that one. Close out the vendor. Close out, or the customer center, the vendor center. We don't need that open anymore. We don't need the chart of accounts open. We don't even need this open anymore. We don't even need that. We're going to go back just to the home page. Now we can enter the two sides of the transaction. So we're going to enter a bill and we're going to enter an invoice, and then we're going to see if we can kind of wash those two out. So those are the only transactions in place. So let's enter the bill first. That's going to be the more confusing one because it's in foreign currency. So I'm going to minimize the screen to the right. I'm going to hit the drop down. I want it to be the payable exchange broker account. So that changes the currency to the Mexican peso. And then I want to be saying that this is going to go to the exchange broker, also set up in Mexican pesos, meaning we're going to pay this particular vendor not in dollars, but in pesos. And the date that we're going to be putting in place will then be the 10/1/X1. So I'm going to say 10/01/21. And then you've changed the date, so it's going to change the transaction down here for the exchange rate. I'm going to say yes. Now, it changed it to the exchange rate that we set up in there, and I set up in the system not the current spot rate, but rather the forward rate. So keep in mind that's the forward rate that it's going to be using. And then we're going to put in our amount in pesos of 5,000. It should then convert it to the proper amount in US dollars given that exchange rate of the 3,700. See if it does indeed do that. That's what we have here in Excel, so that looks good. Then I want to go to another account. So notice the bill itself means the accounts payable is going to increase. The accounts payable is going to increase by $3,700, representing the fact that we're going to be paying in the future, not in dollars, but pesos, 5,000 of them. But the current equivalent amount based on the rate that we used is going to be on the books at 3,700. The other side will typically go to whatever other account we put down here. I want to put it to like a clearing account because I want this side to wash out to what we put on the other side, which is going to be in the invoice. So that's in that way, the two transactions will kind of wash out. Instead of us entering a journal entry, we'll enter a bill, then an invoice, and then it'll increase the payable and the receivable. So let's check that out. I'm going to add another account. This is going to be a clearing account. So I'm going to hit the drop down here. And I'm going to say this is going to be an other current asset account, other current asset. And I'm just going to call it a clearing account, which means I think this count should always be 0, like right after we use it. I'm just going to use it to put money into it and take money out of it in the same day. That's what I would term a clearing account. Going to set that up. And I want it as an other current asset, by the way, because I want it on the balance sheet and not a temporary account that could wash out to retained earnings if there's any problem with it. I want it on the balance sheet and not not rolling over into retained earnings if there's some kind of cutoff issue. So I'm going to say save and close, and let's record that. So I'm going to save and close this and say yes. Let's take a look at the balance sheet and check out what happened. Reports drop down, company and financial. Take a look at the balance sheet standard. We'll change the dates up top and the customized reports from 01/01/21 to 12/31/21 and then OK. So there we have the clearing account has increased and the payable has now gone up. Let's hit enter the other side now. The other side, I'm going to go to the home page. We're going to go to the create invoice, creating an invoice, and I'm going to minimize this window to the right. And this one is going to be for the customer we set up, which is simply in US dollars with the exchange broker, same date, 10/01/21. That's what was already there, but I re-entered it. And then the item, I could set up an item, which is just going to be item 1. And I'm just going to have it as service item, and I'm not going to put anything in the rate, so I can just populate what I need here, but I must specify an account. That's important. Now this is the other account. I want this going to the clearing account, which we set up right there. So clearing account, and maybe we should record this as forward contract item, so it'll specify when we find this item, and that will go to the forward contract. And so then I'm going to say that this was for, and I'm simply going to put it on the books for the 3,700. No exchange thing needs to happen here. No currency difference. This is just going to be on the books for the 3,700. We're going to receive dollars in the future at the end of this. Now, because this is an invoice, it's going to increase the accounts receivable. The other side typically goes to sales, but it can go wherever we want it to go, driven by the item we set up. In this case, it's going to the clearing account, which will bring the clearing account back down to 0. So I'm going to say save and close, and then we'll check it out. So save and close, and yes, and then we'll check it out on the balance sheet. So within the balance sheet, now we've got the receivable on the books, that 3,007. It is on the books with the invoice. We've got the payable on the books. It's on the books with the bill. Closing those two out, it might be useful to see this in terms of a trial balance. Going to the reports drop down, taking a look at the accounting and taxes in the good old TB, otherwise known as the trial balance. 01/01/21, 12/31/21 being the dates. There's our receivable, there's our payable. Here's the clearing account that has now gone to 0. Double clicking on it, we see it increase with the bill, decrease with the invoice. Closing that back out. Now also note that we do have a beginning balance in cash here on the books. So this has nothing to do with the forward contract, but let's just put that beginning 100,000 in our checking account. So I'm going to go back on over and say, let's go to the lists drop down, chart of accounts, and I'm going to add another account for just our checking account by going to the account drop down or rise up, and we'll go to new up top. And this is going to be a bank type of account, bank account, because it's our checking account. Simply our cash checking account in dollars, so nothing's fancy or special going on here. Checking. I'm going to label it as USD for the US dollar checking account, and it is the US dollar checking account, so I'm going to say save it, close it, and then OK. And then I don't want to buy any checks or anything, or set up bank feeds. And then I'm going to double click on the checking account and just record the transaction for that 100,000 as of 01/01/21. And this will be a deposit. So I just put deposit, and it's going to be 100,000 on the deposit side. And then the other side is going to go to retained earnings, just to put our beginning balance in. If you're not set up as a corporation, it's going to be some type of equity account, owner's equity account or something like that. Tab, and this is just the beginning balance. Beginning balance in the memo. Set it up. And then we're hitting a retained earnings account, so it's saying, hey, that's kind of weird. Like, you don't always want to hit retained earnings, but we know what we're doing, QuickBooks. Thanks for the warning. And then we'll do that. And then if we go back to the balance sheet and then refresh this, don't show me that again. And there we have it. So there's our checking account. There's our receivable. There's our payable. And if we look at it in terms of a trial balance, which is often a good way to see this, here is our information that we have thus far. Now, in the future then, if we go back to the home page, we're going to have this cutoff. We might have a cutoff date that we might have to deal with, and we will have to deal with. We'll see that. If we didn't, we can just enter the receivable and the payable. QuickBooks then could help us out then simply to record the adjustment, which will be a gain or loss to the differences in the exchange rates for the payable, which is set up in terms of the foreign currency. We'll be paying in pesos rather than the dollar, which is what we're measuring our financial statements in.